Euro USD price forecast. Will it regain the 1.1600 threshold? Euro USD price forecast. The struggle to reclaim 1.1600. Sometimes, the fate of a currency pair hinges on just a few decimals. And right now, all eyes are on whether Euro USD can push back above the psychological barrier of 1.1600. So, what's keeping the euro-dollar tug-of-war so tense? Let's break down the key forces at play. Currently, the Euro USD sits at 1.1586, consolidating recent gains while hovering just shy of that crucial 1.1600 threshold. The US dollar took a bit of a hit following a disappointing US non-farm payrolls NFP report. That softer labor data rekindled investors' hopes that the Federal Reserve might trim interest rates as early as September. Is this hope misplaced or the start of a bigger trend? But here's where it gets controversial. Even after the underwhelming jobs figures, the Fed has maintained a cautious and some say hawkish stance, warning that persistent labor market strength and inflation risks, potentially heightened by U.S. tariff policies, limit their room to cut rates. Yet many traders argue the data, recent macroeconomic releases hint at easing inflation and a labor market that's not as tight as before support an eventual rate reduction. Inflation still floats above the Fed's coveted 2% target, but most analysts now see a 25 basis point cut on the table. Meanwhile, sentiment in the Eurozone isn't helping UR's case. The Sentix Investor Confidence Index came in unexpectedly weak for August, plunging to negative 3.7 after showing market improvement in July. This surprise dip has thrown up another roadblock for Euro bulls, preventing any swift climb despite a general uptick in broader market optimism. On the U.S. side, traders are also watching for June factory orders data, which are forecast to pull back from May's fiery 8.2% jump, a potential wildcard for short-term volatility. Euro USD technical view. Caught in limbo, zooming in on the charts, the daily outlook for Euro USD shows that buyers have stepped in just above the 100 simple moving average, SMA, currently near 1.3270. But to really flip the script bullish, the price must first topple the flat 20 SMA resistance at about 1.1640. Adding to the suspense, technical indicators have rebounded from oversold conditions, yet still lack the strength to break decisively higher, sitting muted just below their midlines. This suggests that bullish conviction remains lukewarm, at least for now. On the 4-hour chart, things look range-bound. The pair is holding steady, neither dropping nor appearing poised for a sharp move lower. The 20 SMA has lost its prior downward momentum and now sits flat around 1.1480. Technical indicators are similarly directionless, though they're comfortably above their midlines, hinting at a possible tilt higher if buyers regain interest. Interestingly, during Asian trading, Euro USD made a few attempts to breach 1.1600, so a break above could tip the near-term risk in favor of further gains. Key levels to watch. Support 1.1545, 1.1505, 1.1470. Resistance 1.1600, 1.1640. 1.1685. And this is the part most people miss. Forecasting currency movements isn't just about current numbers, but how the narrative around those numbers shapes expectations. So, what's your take? Will dovish Fed hopes or weak Eurozone sentiment have the bigger impact in the weeks ahead? A final word, investing carries risk. Remember, any forward-looking statement in this article carries its own set of risks and uncertainties. Currency markets are complex and can lead to significant financial loss, and sometimes emotional roller coasters too. All analyses here represent the author's perspective, not the official views of FX Street or its affiliates. there's no guarantee of accuracy or timeliness, and any trades remain your sole responsibility. Got a different view? Do you think the Fed is being too cautious, or is the market getting ahead of itself with rate cut expectations? Could weak Eurozone sentiment wipe out any gains? Or will the Euro-USD surprise us all? Share your thoughts below. We want to hear how you see this playing out. Euro stabilizes above 1.15. U.S. jobs data sparks Fed cut bets. Imagine watching the financial markets closely, only to see the euro stabilize just above $1.15, bouncing back from a concerning 7-week low of $1.139 on August 1st. This recovery came as a direct result of broad dollar weakness following the release of disappointing U.S. jobs data. The July payrolls report was worse than expected, compounded by significant downward revisions to earlier figures, which have sparked widespread speculation that the Federal Reserve might cut interest rates as early as September. But here's where it gets controversial. President Trump's dismissal of a senior Labor Department official in response to the report has only added to the market's uncertainty. As we speak, money markets are pricing in not one, but 2 more Fed rate cuts this year, starting in September. Meanwhile, across the Atlantic, the European Central Bank is expected to maintain the status quo regarding interest rates. The Eurozone's annual inflation rate remains steady at 2.0% in July, a slight surprise given earlier forecasts of 1.9%. However, investor sentiment remains cautious due to new U.S. tariffs, imposing a 15% duty on EU exports to the U.S. And this is the part most people miss: the potential ripple effects of these tariffs on the global economy. It's a complex web of cause and effect. But one thing is clear: the next few months could be pivotal for the euro and the dollar. What do you think? Will the Fed's rate cut predictions hold true? Or will the European Central Bank's steady hand guide the Eurozone through these turbulent times? Join the conversation in the comments below.